traders, and welcome. I'm Tamar, Mehr, FXGlobe ambassador, and this is FXGlobe Masterclass series. Today's Masterclass is about FOMO, the fear of missing out in trading. If there is one thing that both new and experienced traders have in common, is seeing a big move and wondering, why am I not part of this move? In reality, we can't be part of every move in the market. We know this from an analytical perspective, but emotionally, we tend to feel like we missed out on something big, something that, as a trader, we perhaps should have known about and should have taken advantage of. When it comes to FOMO, the difference between experienced versus newbie traders is both the reaction and follow-up action that occur after seeing such a big move. Experienced traders are well aware that one just cannot possibly catch every move in the market. We cannot be at our screen watching every market and every time frame, every minute of every trading day. It is simply not doable. So naturally, whilst busy with their life or even sleeping, there are going to be moves that happen during that time that a trader was away from the chart. And what if the experienced trader was at their desk at the time of the move and still missed on the opportunity? Well, they will then re-examine the chart to see if they have missed anything and try to get an understanding of why they were not part of this move. They will very carefully analyze the market that the move has occurred in, together with the different time frames. They will then most commonly conclude that there simply wasn't any setup according to their trading strategy. An experienced trader knows that if there is no setup, then there is no trade. It sounds simple, yet it can be very confronting when you watch the market moving like it's on a mission to touch the skies or the bottom of the earth. A newbie trader, on the other hand, tends to let those thoughts of could have, should have, would have creep into their psyche. They will start fantasizing about the amount of money they could have, should have, would have made, and all the things they could have bought with that money. They could even think about the story they will tell their friends and their colleagues about this big move in the market that they just knew and traded, from the ultimate start to the point that the final move has ended. This thought will quickly turn to a fear of missing out and a feeling of not being part of something. A newbie trader might feel an actual sense of losing money by not being a part of that move. And so the fear of missing out inevitably turns into the pain of losing money. So with those negative feelings now in control, the newbie trader might decide to jump into a trade in the direction of the move, just to get rid of these bad feelings and in the hope that the move will continue. And they will end up with a stellar result. Unfortunately, and more commonly, these actions end up with big losses. Jumping into a trade without a proper setup, based solely on a hope, can akin to jumping headfirst into an empty pool, hoping that it's gonna be okay. In many cases, the losses could be exacerbated as the newbie trader is making emotional trading decisions rather than following their trading strategy with sound risk management and trade management. So think about the dangers of FOMO and the havoc it can have on one's trading account and mindset, and work to eliminate FOMO from taking control of your trading decisions. Happy trading, everyone!